Well, welcome back. Stocks are extending the sell-off this morning that started the beginning of the year. Take a look. Despite that late-day reversal yesterday, which actually pushed markets in the green by the close, this morning, the Dow Industrials are down 165. The NASDAQ is down 40, and the S&P 500 now in correction territory. Yesterday, the Dow, NASDAQ, and the S&P 500 making the biggest U-turn in over 13 years. At one point, the Dow Industrials were down 1,100 points, and by the close, in the last couple of hours of trading, when buying came in, the Dow finished up 99 points. The volatility coming as investors are weighing the Federal Reserve's moves and whether or not this exercise of going from an easing stance to a tightening stance will happen safely and easily. It is kicking off its first policy meeting of the year today, where we have the Fed and colleagues talking about their plan, and we will get a press conference tomorrow with the details, hopefully, of what they're about to do. Dagen McDowell, what strikes me is that right now, as we speak, they're still buying. They're still easing. They are winding down that last program to buy securities every month. So we're not there yet, and investors are questioning whether or not they've underestimated how tough this exercise will actually be. What do you think?
The Federal Reserve might not have an option. Maria, inflation has shot up to a near 40-year high. This is part of their dual mandate, price stability and low unemployment, if you will, or full employment. So what their option is not, one of their mandates isn't to prop up speculators and prop up asset bubbles galore that the Federal Reserve and other central banks created. This has been an unprecedented, never seen before juicing of assets. And I go back to the response to the housing bubble crashing. We've never fully removed all of that stimulus. As I've pointed out before, the balance sheet at the Federal Reserve was about $800 billion before the 2008 financial crisis. It's now close to $9 trillion. And so they can raise rates a couple of times, but if at some point they need to get that balance sheet down, because what if there is a recession? What's going to be the policy response then? They're pushing on a string, so to speak. I predicted on the Fives New Year's Eve special that my prediction for the year was asset bubbles burst because the Federal Reserve gets aggressive at trying to tame inflation. Kaboom, goes stocks, crypto, real estate, and crypto, Bitcoin's lost half its value since November, since the Fed just announced this. Unprecedented stimulus means an unprecedented come down when they try to remove it.
Hey, that was a great prediction, Dagen. Layer on top of that, Patrice, bad outcomes from bad policy. Look at the price of oil. When you have oil up above $85 a barrel again and gasoline prices up 60% year over year, that's putting added pressure on all of this, and it has everything to do with the United States no longer being energy independent, and now we're reliant on players like Russia, who is about to invade Ukraine. Your thoughts?
Exactly. Yeah, Maria, good morning. Good morning, Dagen. I worry that we might see a gas hit, or fuel oil hit $100 a barrel in the near future. We haven't seen such a high in years, but it's very possible, especially if we see something happen with Russia and Ukraine. Suddenly, all of a sudden, I think the oil markets would hit a lot of turbulence. That's going to have a rippling, impact across the entire economy. And right now, I think regular people are just saying, where is the relief that we've been promised? We're spending, 50% more than we were a year ago trying to fill up at the gas tank and the gas pump. Well, these international impacts and the fact that we're not oil independent and fuel independent is going to make a big impact. I would love to see President Biden and the White House shift their policy focus and their rhetoric against hating on, for international domestic production, and really say, okay, we need to figure out what we can do to have clean energy in the future, but also to make sure that we are not dependent on other sources right now.
Yeah, Patrice, would you be avoiding riskier assets? Look at Bitcoin. It's now below 33,000, but you're talking about, as Dagen just noted, half of the value lost just since November. It rebounded a bit yesterday, but we are looking at Bitcoin at 36,251 right now, and that is down 50% from the highs.
Yeah, I wouldn't avoid it. I mean, I think now is the kind of the time to get in, especially if you haven't invested in cryptocurrency yet. My husband and I were just talking about what we want to do, and I think that you're going to see some rebound. I think you're going to see, is especially for new people, new entrants into the
Okay.
market, new entrants into this world. Particularly in my generation, millennials and young people are willing to kind of take that risk. So I think you'll start to see it'll increase in price and value again. But there's turbulence, and it's to be expected. I wouldn't put all of my all of my retirement in that basket, but it's great if you're just trying to get in and diversify your portfolio a little bit more.
Hey, Maria.
Yeah, understood.
You know, there are
Yeah.
millions of job openings in this country, and certainly a lot of people anecdotally have quit their previous jobs to trade crypto from home for a living.
Yeah.
Oh, wow.
It's akin to
Holy
people
moly.
quitting their jobs and going out to flip houses. And it's much
Yeah.
easier to trade crypto from home than to actually flip real estate. So if you have a washout in cryptocurrencies, it could actually help fill some jobs that are open across this country.